The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we took a look at Tuesday's money flow in the grains and oilseeds, pretty decent day across the board with some moderate strength in corn, beans, and the wheat trade. We look at livestock, kind of a mixed bag there. Some good strength in feeder cattle. Outside markets relatively quiet. Not a bad start to a holiday-shortened week as we had President's Day Monday, getting back to trade on Tuesday. Let's walk through what we're seeing in the markets. Joining us now, Matt Bennett with agmarket.net. Matt, it's good to catch up with you, my friend. Are you doing your best to stay warm with how cold it is for many of us across the country this week?
Yeah, it's a little chilly, that's for sure. It's in our part of the world. I got up this morning, it was 0, but I don't know what. We didn't have a lot of wind, but I mean, it was just pretty biting outside. And then I talked to our Tyler Schau up there in North Dakota. He says 35 below. So I said, well, I need to quit complaining. But yeah, it's chilly. A little bit of snow forecast. We could get a little more snow, but overall, I think right there about 10 days ago, guys were getting spring fever around here, because it was warm. And we're like most people, maybe not quite as dry as some, but, there's not an abundance of moisture. So, there's a lot of us kind of sitting around wondering next warm up if maybe some guys will get to scratching around a little.
Well, and I know I talked with Eric Snodgrass on Tuesday morning, and he's still got some of his drought concerns for this spring and summer in the Midwest. But to your point, maybe getting a little spring fever, and what's the old adage? Planting the dust and the bins will bust. So maybe we still got a long ways to go, I guess, Matt. I'll put it that way, right?
Yeah, that's for sure. Yeah. A dry spring has always been the best for us, for sure. Just from a standpoint of getting a full stand, you got to hope if it's dry, we get some heat to go along with it. But by all means, it's right around the corner.
Let's walk through this grain market a little bit. Moderate strength on the day Tuesday. Kind of came out of that holiday weekend and looking for a little direction. Just felt like an okay money flow day to me. I didn't see much in the way of major news headlines. What's your take on the grains on Tuesday?
Well, I think the interesting thing, Jesse, holiday shortened week, you come in here Monday night and the markets were lower, corn, beans, wheat, all lower. Wake up in the morning and hey, surprise, we're up, and so what I've seen, what you've seen, what we've all seen lately is that buyers continue to show up on weakness. And so, I still think that there's a fair amount of inflationary money that's kind of flowing into this market. This gold market's been on fire. Crude went up today, as you suggested. Feeders were strong, fats were mixed, but overall, most commodities were pretty strong here today. And I've got to think that there is a reason, there's a method to the madness, if you will, when it comes to funds. I think if we're going to focus on corn, I just think the funds want to see, is this safrinha crop going to pan out, and are we going to have a conducive spring for big corn acres? Because I know some people have maybe had a few less corn acres on the docket than what I do. But Jesse, I've been out all winter, as you know, and especially as I move north, boy, I'll tell you what, there's a lot of growers telling me that they're going to be very heavy corn because they just can't make $10 beans work with the kind of beans they raise as far as yields are concerned. And then you move over to corn, and they'll tell me, hey, I can raise as good a corn as what you can. It's just that right here in Central Illinois, just to be totally honest, we've been blessed with environment. And I don't know if it's just, our weather patterns, but our bean yields, have been running 75 to 85 bushel pretty much every year the last few years. So corn to beans, beans to corn in this part of the world makes sense. But I think you move north, it gets a little more interesting.
Well, and to your point on corn, Matt, we saw on Tuesday, March corn, old crop, got above the $5 mark in futures. New crops at that $4.75 level as well. I mean, it just seems like this corn market is one that it doesn't have a reason to go down right now. It seems like it's kind of chopping sideways to higher. Funds love this market, even though they got out of some of their long positions last week. But this corn market just looks healthy, Matt.
Yeah, I think funds as of Tuesday got out, but then you look at the weekly gain on corn. It makes me wonder if this Friday, when the CFTC comes out, that you're going to see, maybe the funds actually bought some of those back last week before the end of the
Hmm.
week. You look at the corn situation, Jesse. In my mind, how things have changed. The U.S. balance sheet is where we're going to focus just initially. But when you were talking last fall about a 2 billion carry, most of us felt confident that there was a pretty good chance of that. As demand grew, it's kind of what if yield goes down as well? And clearly that dry August robbed some bushels. There's no question. So stocks to use at 10.2% is more bullish than talking about a 1.5 carry, because people look at a 1.5 carry and they're like, oh, that's plenty of corn. But a 10.2 is getting a little snug, and so last year, world stocks weren't anything to brag about. They continue to
Hmm.
dwindle a little bit. But as you stop and look, the last 10 years or so, we've just continued to whittle down stocks. And so,
Yeah.
with that being the case, I think funds are sitting here saying, what if we get a supply disruption? All of a sudden you're looking at potential issues, especially if you extract Chinese stocks. This is easily a 10-year low in world corn stocks as far as available supply. And so, stocks to use, we're about as tight as what we can get. And so, I think the thing that changed from last year, once again, is just that the U.S. balance sheet was so burdensome, if you will, or thought to be. We ended up there at that 1.7-ish level, and that's plenty of corn. But you start whittling that thing down, and it changes things. So I do think we have to be very cognizant of what really big corn acres can do. And so I think if the market continues to offer opportunities here, a person at least needs to lock in some worst case scenarios. I don't want to get locked into a lot of fall sales, because as your buddy Snodgrass continues to tell us, there's chances you could see some weather. And if you see weather, given the stocks and stocks to use both domestically and world, you could see some serious fireworks this year.
Very true. Very true. And I'm spending time at the National Ethanol Conference here today. And, I think about more corn acres, looking at that ethanol demand. There's still the talk out there about 45Z and all the unknowns there. But I just, you look at the ethanol industry, and they're talking about it here this week, just a matter of, finding ethanol export markets and more, finding more uses for corn ethanol here in the U.S. So that could be another demand driver in this corn market as we go through this year, Matt.
Yeah, for sure. And you look at ethanol exports, and clearly Canada's taken around 40% of our ethanol exports. Tariffs could kind of come into that discussion. But whenever you look at ethanol exports, you name it, they all did what you would expect to do with really cheap corn prices. We built this really strong demand base. And so, where the fireworks could happen is when you get a big demand base and you intersect that with some sort of supply disruption. That's when people want to be long. And I believe that's the reason why the funds are so long here. But absolutely, there's still talk with 45Z, some rumblings today that maybe the blender tax credit for renewable diesel and soybean diesel could kind of come back into play. But I don't want to talk about 45Z too long, Jesse, because
Yeah.
if there's something that's super aggravating to me, it's just been the lack of transparency and knowing, what we as growers can do. And I say we, because of course I farm, and I talk to a lot of guys that are asking me, how are you looking at this? I said, there's nothing to look at, because we don't know, we really don't know the situation. So I do think if they would have come out last summer and said, hey, these are the definitive steps that you need to take to be able to get that tax credit as far as ethanol, corn-based ethanol, going to your SAF plant, the one in Georgia, and then there's one and there's a few of them that are starting to kind of try to get started up here. We got to know, though. I mean, we have to have some guidance here. So I was super excited to see that Brooke Rollins was their top producer this week. I do think she was trying to provide some sort of, support towards renewable fuels. I mean, it sounded very positive to me. And you've got to think, if we want energy independence, given what we've got going on from the growth standpoint, as far as renewable fuels or potential growth, that would be really a really strong way to not only support rural America, but achieve that energy independence.
Matt Bennett with agmarket.net joining us here today on the show. Matt, let's talk about that soybean balance sheet. That is way more burdensome. I know we had the NOPA crush numbers out Tuesday, kind of at the low end of expectations. The crush, though, still the second highest on record for the month of January. But you look at this soy picture, and this kind of ties in with what we were talking about corn-wise. The soybean market's just not that friendly right now, is it?
No, it's not. And the interesting thing, as you continue to work on this soy to corn ratio, it's the lowest we've seen since 2007. And so, you've got to ask yourself what's going to happen with regard to acres. And as I suggested, I think corn acres will be robust. And so, maybe if you take corn acres up towards that old 96 high or maybe even above, I think it's in play, Jesse. I mean, I don't know. I think Mother Nature will have a lot to say about it. Availability of, for instance, anhydrous ammonia in the areas that didn't get a lot put on last fall may have something to say about it as well. But as I talk to growers, especially north, they feel like they're prepared for a big corn year. And if that happens, then maybe you finally get a little bit of a shot in the arm for this bean deal. Because let's face it, 380, 390 in that area, to me, that's not a burdensome stock situation by any means, but it's also not tight. And so if you go from 87 million acres down to 82 or 3, now all of a sudden you need a good yield. There's no question that the bean market would be somewhat sensitive to weather situations just because the domestic balance sheet could get super tight. And so, yes, the world's got plenty of beans, but we've kind of whittled that thing down from low 130s to 124 here. Could that go higher? Probably could. I think Brazil, maybe USDA is a little low there on Brazil in February. I was surprised that they didn't necessarily adjust that crop a little bit bigger. But regardless, yes, you've got a lot of beans in the world. It's just that you could get pretty snug here in the U.S. And so if nothing else, Jesse, what I expect is that soy to corn ratio to have kind of a whipsaw effect whenever we get out towards those acreage numbers, because I really think you're going to see some pretty big movement there.
Got to ask you in the livestock trade, and we both mentioned it. Feeders had a really good day Tuesday. It was a little more mixed in fats, though. I mean, this cattle situation, are we finding a floor here after a little bit of movement and volatility? What do you think?
I certainly think it's possible. It's been a cash-led market all the way. You still can't buy feeders anywhere for what you would call a bargain. It's a little scary for me, for the folks that are buying feeders right now that really can't go out and sell the deferreds on the fats and claim a whole lot of profit, if any. I think that that's where the biggest challenge is for those holding on to fats. I mean, these things are coming in at just massive weights, and you've got guys that are selling still at $2 and above as far as the actual cash price that they're getting. And so, I think whenever you look at fats, the funds pretty much said, hey, they got spooked a little bit with the bird flu deal. And in my opinion, they want to take some profit off the table. This is still a bullish long-term fundamental situation. But at the same time, you can't count on the funds to just stay long for perpetuity. So we're still of the opinion that you keep a floor into these prices, and shoot, I know they're expensive, but I've seen a lot of guys and gals doing things like, like a 195, mid 190s type put, and maybe just throwing a ceiling up there at 210, selling a call up there. And, I know people say, well, I don't want to pay margin. Well, I think you'd be happy to pay margin if you're selling your fats for 215, so I do think that there's ways to protect yourself. It's just a matter of sometimes we get a little spooked into trying to do anything. And I think sitting on your hands on this cattle market is probably not the right thing to do, because you're still historically very high as far as prices are going.
It's just been something that we talk about this all the time on the show. It comes down to risk management here, and especially in this cattle side. I mean, just at these lofty levels, we know eventually at some point this market will probably go down. Maybe not. Maybe this is our new normal, price point in futures. In cash. We don't know, but you just have to protect yourself when it comes to looking at this cattle market or in the grains or whatever. It's all about risk management, right, Matt?
Oh, for sure. I think when you look at once the Mexican cattle start really coming across the border, clearly they're going to be glad to sell them and get them moved north. And with that the case, then I'm not so sure that we won't see even more cattle coming north than what we saw before. There's no doubt, and it's no secret that over the course of time, you can't build a cattle herd quickly. It takes a long time to do so. From a fundamental standpoint, you've got to assume we're going to be looking at a pretty bullish scenario for some time. But with that being the case, we also have to understand, as you said, that you never know what tomorrow is going to bring. And so it's certainly a cyclical market. It's always been a cyclical market, and so I, as a cattle producer, because I've got cattle as well, we just want to protect ourselves and lock in some sort of a worst case scenario. And the beauty of that is that some of these worst case scenarios look pretty freaking profitable right now. So I just highly encourage growers and producers, ranchers, if you will, whenever it comes to cattle, to at least cover your rear end, because we've seen before what a $25, $30, $35 drop in cattle not so long ago, just before the calendar turned in 24, in late 23, we just absolutely took it on the chin. And it was still a fundamentally bullish situation, quite frankly. So got to be cautious as we make too many thoughts about what might happen. I just want to protect myself.
Final thoughts before we let you go today, Matt. I know you got a busy plate on busy day on your plate.
Yeah.
What would you reiterate to folks? What would you add here as we close out here today?
Yeah, I think that we can talk about how, like, for instance, corn is a bullish situation, but let's take a look as far as cash goes. We know that the growers let loose of a lot of corn here lately, but at the same time, I do know, and I do talk to a lot of growers that's got a fair amount of corn left here. And so if your cash corn's gone up $1 or more as far as true cash price goes, you got to ask yourself why you're bullish right now. And so I'm not saying I'm bearish by any stretch, but I don't mind rewarding the market as it goes up. Incremental sales into a rallying market has been a marketing plan that's proven really, really strong for me over the course of time. When I look at new crop, though, still be careful, stay flexible. I think that there's a lot of moving parts here this year, and you may actually get some summer volatility that we did not get last year. So, I want to be very smart as to how I handle this thing, because there's a lot of ways to manage risk, and there's a lot of ways to put yourself in a more risk situation, and I don't want to do that.
Always good to catch up with you. agmarket.net for more information. Matt Bennett, thanks for being with us here on Market Talk today. Have a good one. We'll talk to you again soon.
Absolutely. Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.